Have you noticed how the world of cryptocurrency has been on a roller coaster lately? It's been a wild ride. Major cryptocurrencies like Bitcoin and Ether are taking a nosedive, dropping by more than 50% from their all-time highs over the past few months. But why is this happening, you might wonder? Well, there's a lot going on behind the scenes. Factors like rising interest rates, concerns about inflation, and the ongoing conflict in Ukraine are all contributing to this market turmoil. Welcome to the Cryptoholics Corner, your hub for all things crypto. Join us as we dive into the world of cryptocurrencies, uncovering insights, sharing news, and demystifying the complexities of this exciting digital frontier. Stay tuned for enlightening episodes, and remember, the crypto universe is vast, and together, we'll navigate its depths. Today, we're going to break down these factors in a way that's easy to understand. We'll explore why they're causing the market to go through such a turbulent phase, and for those of you who are investors or thinking about dipping your toes into the world of crypto, we'll talk about what this all means for you. You don't have to worry, it's not all doom and gloom. We'll also take a peek into the future and discuss what the long-term prospects might be for the world of cryptocurrencies. So, let's buckle up and embark on this crypto adventure together. Let's delve into some critical factors that are currently shaking up the world of cryptocurrencies. First on our list is the hot topic of rising interest rates. The Federal Reserve is on a mission to combat inflation, and to do that, they're expected to keep hiking interest rates. But what does this mean for cryptocurrencies? Well, it means that borrowing money is going to get more expensive, and that includes the funds businesses needed for new projects. As the cost of borrowing rises, economic growth may slow down, and that can translate to lower demand for cryptocurrencies. Think about this. Rising interest rates also make it pricier for investors to borrow money to buy cryptocurrencies. This can lead to a reduction in the money available for crypto investments, which in turn can drag down cryptocurrency prices. So keep a close eye on those interest rates because they're intimately tied to the crypto market's performance. Next up is inflation, which is making headlines worldwide. In the United States, inflation is at a 40-year high. That's a big deal. High inflation erodes the purchasing power of consumers and businesses. When people have to spend more on essentials like food and housing, they tend to cut back on spending elsewhere. That can result in lower demand for discretionary goods and services, including cryptocurrencies. Additionally, high inflation can hit businesses' profits, potentially leading to reduced investments and hiring. Again, this can mean less interest in cryptocurrencies. Now let's talk about the war in Ukraine. Geopolitical turmoil like this tends to make investors nervous. When that happens, they tend to move away from riskier assets like cryptocurrencies and shift their money into safer options like cash or gold. This flight to safety can reduce the demand for cryptocurrencies and push their prices down. Moreover, the war in Ukraine is causing disruptions in global supply chains and driving up energy prices. These issues can hamper economic growth, further impacting the appeal of cryptocurrencies as investments. These three factors we've discussed, rising interest rates, inflation, and the war in Ukraine, are all contributing to the recent turbulence in the cryptocurrency markets. But remember, these challenges aren't unique to cryptocurrencies. They're affecting other investments like stocks and bonds too. So, if you're considering jumping into the crypto world, be sure to assess these risks carefully and maintain a long-term perspective to weather the market's ups and downs. Let's immerse into the significant implications of the recent cryptocurrency market sell-off for investors. First and foremost, it's imperative to grasp that cryptocurrencies are no walk in the park. They fall into the high-risk category, so before you even think about investing in them, carefully assess your own risk tolerance. Remember, cryptocurrencies are still relatively young, and their prices can swing wildly in the short term. What's more, they operate without any central authority overseeing them, which means there are no safety nets or guarantees for your investments. Now, let's debunk a common myth. Cryptocurrencies aren't necessarily your golden ticket to hedge against inflation. Some folks believe that since cryptocurrencies aren't controlled by governments, they could serve as a shield against rising prices. However, recent events have shown that cryptocurrencies can be just as unpredictable as other investments, and they might not be your go-to solution for immediate protection against inflation. Another key point to remember is that cryptocurrencies shouldn't replace traditional investments like stocks, bonds, or real estate. Instead, they're a unique asset complementing a diversified portfolio. Putting all your investment eggs in the cryptocurrency basket is a risky move. So diversify, diversify, diversify. If you're contemplating a journey into the world of cryptocurrencies, here are some essential tips. Start small. Never invest more than you can afford to lose. Do your homework. Get educated about different cryptocurrencies and the risks associated with them. Diversify your investment portfolio to spread risk. Be patient. Don't expect overnight riches with cryptocurrencies. And always be mentally prepared for the fact that cryptocurrencies are a risky business. One last thing to keep in mind is that the cryptocurrency market is still evolving. Regulations are being shaped as we speak, and there's a chance that governments may impose stricter rules in the future. This could have an impact on cryptocurrency prices and trading conditions. The recent cryptocurrency market sell-off is a stark reminder that digital assets are incredibly volatile and can experience rapid price swings. So, before you even think about investing, take a good hard look at your own risk tolerance. It's essential to be prepared for the rollercoaster ride that cryptocurrencies can offer. Think of this as your backstage pass to understand what's going on in the crypto universe. When we gaze into the crystal ball for the long-term outlook, things look quite promising for cryptocurrency markets. But, and it's a big but, there are some intriguing twists and turns that can impact the short-term performance of these digital assets. First off, let's talk about the engine that drives cryptocurrencies, blockchain technology. This is like the magic sauce behind all of it. It's a bit like the heartbeat of the crypto world, ensuring transactions are secure and transparent. But here's where it gets really interesting. Blockchain isn't just about the money. It's got the potential to transform how we manage supply chains, verify identities, and even conduct elections. As this technology keeps evolving, more and more businesses and governments are getting curious about cryptocurrencies. They're starting to accept them as a form of payment. And when more people want something, what happens? Prices tend to go up. But that's not all. The growing acceptance of cryptocurrencies by regular businesses and governments is a game changer. Picture this. You can now buy your morning coffee with crypto in some places. Some governments are even considering creating their own digital currencies. As this trend catches fire, more and more people are going to dip their toes into the world of cryptocurrencies. This surge in demand typically leads to higher prices. Now let's talk about you, the investor. You might be thinking of cryptocurrencies as more than just a wild roller coaster ride. You see them as a safe place to park your money, almost like a digital version of gold. So, you're not alone in this game. As more folks like you pour your money into cryptocurrencies, it's like adding fuel to the fire. It can send prices soaring. But, and here's where we hit the pause button. There are some potential roadblocks on this crypto highway. Number 1. Regulation. Governments are still trying to figure out how to regulate cryptocurrencies. Their decisions can make the market jump around like a cat on a hot tin roof. Number 2. Hacks. Think of your crypto exchange or wallet as your digital bank. Unfortunately, banks can get robbed, and so can these crypto platforms. That means investors could end up with empty pockets. Lastly, we have volatility. Imagine a roller coaster but for your money. Cryptos can go up and down like crazy in a short time. Making quick cash isn't guaranteed. The long-term vision for cryptocurrency markets is pretty exciting. But if you're thinking about diving into the world of cryptocurrencies, it's a bit like setting sail on a new adventure. Be mindful of the risks, plan accordingly, and remember, there might be some turbulence along the way. Thank you for joining us on this exciting journey through the world of cryptocurrencies here at the Cryptoholics Corner. We hope you've gained valuable insights and knowledge that will empower you in your crypto endeavors. Don't forget to hit that like button, subscribe to our channel, and click the notification bell to stay updated with the latest trends, news, and tips. Until next time, keep exploring, keep learning, and keep prospering in the fascinating realm of cryptocurrencies.